Good morning, everybody, and this is your Dow Jones setups for today. So, 0.5% cut in the interest rate, and we get a pin bar. So, obviously, there was some noise that came along with it, some narrative, and something probably along the lines of this is the only one expected for the next 6 months or the year or whatever. The Feds like to play things down, so that's more than likely what happened. But what I also think is the volumes would have been very low, and probably algorithms that are trading, just let's say trading against the majority of the retail traders that were playing the noise and jumped in on the noise and then got taken out on the pullback, and we'll see that on the lower time frames. But anyway, the zone is still very much the same as we looked at yesterday. I think I'm just going to increase the zone a little bit here, and this does concern me, this pin bar, to be honest. But the only time it's really going to concern me is when we start dropping below 41,450. So if that doesn't happen, I think I would still maintain a very bullish stance. Looking at the 3 hour, look at this big red bar. And I'll explain the logic behind all of this chaos now. Look at my oscillators. I've got great diversions from the previous two swing lows, which are here. And even if you count that swing low and this swing low. But those are the swing lows. Look where the oscillators were. Look at the current swing low. Look where the oscillators are. So that's bullish diversions at the moment. And it was a noise bar that. So let's just ignore what we're seeing on the 3 hour and pay attention to what's actually happening here on the hour and the 15 minute. So I think it's time to bring that level in as well and bring that daily high in there. Okay, so we have a zone of support to the downside and we've got a zone of resistance to the upside. Now, I'm going to come down to 15 minutes quickly. Actually, we're going to go down to the 5 minutes. Right. So, the news comes out. See the massive gap. And what do the retail traders do? Especially inexperienced ones, they jump in immediately. And as they jump in, they would have been jumping in up here, and over 5 minutes, you would have been up 0.5%, up 200 points or something. Guarantee you there wouldn't be much profit taking because there's no structure. People would have been adding to their position, looking for a big win, and then the institutions or the algorithms start trading against that because they know what you've got in the market, and they start hunting the stops, and the stops would have all been in this zone here and as far as below the gap here as well. And you can see how they quickly pushed price down, nailed all the stops, and then went to bed. A lot of retail traders would be sitting with their hand in the head wondering what they did wrong, and the reality, if you're one of those people, you traded news and you shouldn't have been trading news. So that was yesterday. So today, what you more than likely going to see is the people analyze what noise came out yesterday, all the narratives, what the forecast is, look at the forecast for the next couple of months, have a look at what half a basis point does to, or project what half a basis point cut does to some key economic data, CPI, etc., and then place their bets. And the bets are going to be to the upside, but the question is, how much are we going to bet? What are we going to put? What are we investing? Which stocks are going to benefit from this? So obviously, you're going to see people scaling out of stocks and scaling into stocks as well, as they align for a series of rate cuts. So all that chaos is happening, and that's what you're seeing in price action. So what you're looking for is a clear break of 41,884, not this kind of break, clear break, pull back to come and test that, or test 41,792, possibly even lower than that. If you just look left, you can see all these fractals which are going to impact price or hold up price for you. So that's what I'll be looking for. Definitely don't just want to jump in, because if you jump in, you're going to have a stop loss of around 430 points. And if you just zoom out to the hour, that's the reality, because this is a lower low here. If you're just going to jump in and assume that it's going to go, that's where your stop needs to be. And unfortunately, the institutions know that. So there's nothing stopping them from driving price down to come and nail your stop until they've collected as many stops as possible, got all the weak hands out, and then drive the price in the direction they want it to go. So for me, it is still sit on hands, but wait for the break of the structure that I've given you, wait for the pullback into the zone, and make sure that you get your inside bars, engulfing bars, or pin bars on the level, not above the level or near the level or below the level. It must be on the level. Then you have a fairly decent setup, decent entry, small position still, wide stop loss below the bottom of the range, and you should start get going. As you start pulling back, you can add to the position, or you can take profit and then go and put a new position in as price moves. But onwards and upwards is what I suspect we're doing. We just need to break this consolidation range properly and test it before I'm 100% committed to the direction. Anyway, that's kind of my view for today. I hope it helps you somewhat, and we'll catch up with you tomorrow morning. Cheers for now.